Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I'm going to break down some very interesting price action for you all today. I'm going to show you guys institutional order flow to the fullest, a complete breakdown of it in the cryptocurrency markets. This has nothing to do with Wycovian theory, order blocks, or anything like that. This is stuff that really no other YouTuber is covering at the current moment, and I'm not too entirely sure why, mainly based off of all the manipulation and the marketing schemes that are out there in the trading community. Again, you guys can come here to this YouTube channel to find realness in the market, all right, real market evaluation, real technical analysis. Now, yes, this is a hindsight breakdown, so just understand that this is for your knowledge accumulation, but this is to show you guys how I make money trading XRP on Uphold, all right? Uphold is a platform here that we can utilize in the United States, mainly because that's where I'm based out of, that we can actually physically trade XRP. Now, I do not keep my XRP bags on my Uphold account. I only use Uphold to day trade XRP, and then I pull my profits. Now, any of my long-term holdings are on my Ledger device, which again, I suggest that you guys go and get one or look into, potentially moving your cryptocurrency long-term holdings over to a cold wallet. All right. But blessings to you guys all. Thank you all so much for returning. This is going to be a very interesting breakdown on XRP. So if you guys are new here, make sure that you subscribe to the YouTube channel. Again, not a lot of YouTube channels out there covering this type of information, and anybody that's looking to dive a little bit deeper into what it is that I teach and the methodologies that I use, guys, that link is in the description down below for the mentorship. So I'm going to give you guys some gems, and we're going to talk about order flow in the market, and that the banking institutions usually put in two big orders every single day, either bullish or bearish. So we're going to be focusing in on those focal points, as well as the psychological levels that they put those orders at, because we know that banking institutions, especially if you guys have been watching this YouTube channel so far, they piggyback off of each other, meaning that Asia session will usually purchase from the previous day's New York, London, or Asia session, and so on and so forth. London session will purchase from where the previous day's Asia or New York session or London session purchase from, and then so on and so forth. We go on to the New York session, where New York session will purchase from where previous day's London, Asia, or the previous day's New York purchased from. So what we're going to be paying attention to is if we want to get involved in the market where previous day session market makers purchase price action from, to see if we can get a discounted price in that general vicinity, because we know the banking institutions like to buy low and sell high. All right, now that is a stipulation in the market that nobody really truly understands. Okay, buy low, sell high. What does that actually mean? It means that banking institutions do not like to buy price at a premium. They like to buy price at a discount, and vice versa. They do not like to sell when price is at a discount. They like to sell when price is at a premium or at a high. Okay, so if we are in an uptrend, what we're going to be looking for is banking institutional orders the previous day, so either Asia, London, or the previous day's New York session, because we are New York session traders. All right, so let's just say, for example, we have this Asia, London, and New York session. We're looking to trade this New York session. What we're going to be looking for is where the banking institutions purchased from the previous day. Well, if this is our uptrend, and we can see here Asia, London, and New York session, we can see three orders in the market that were put in by banking institutions that drove the market. We also know that the banking institutions are the only people in the market with the amount of money to move the market in this amount of way, or in this amount, with this amount of volume. Okay, so we can see here, just hypothetically speaking, this is the 73.5 cent. This is the 73.5 cent region. This is the 74 cent region, and this is the 74225 region. Okay, so if we're going to be looking to take purchasing power during New York session the next day, what we're going to be looking for is if banking institutions will manipulate price prior to the session open, creating early sellers and early buy scenarios, sell stops and buy stops prior to the session opening, which I'm going to go over into detail, show you guys how price is manipulated prior to the session open, and to see if the banking institutions can push price down into previous discounted days, okay, to take buy positions from for their session. Okay, understanding the real manipulation in the market, understanding that banking institutions like to buy low and sell high. Okay, so blessings to you guys all. Again, that's what we're going to be covering in this YouTube video in extreme detail. Let's cover some price action on XRP. I'm utilizing this as an example because this is one of the main assets that I trade on Uphold. Again, cryptocurrency trading. On Uphold, there's a couple of different assets that I trade, like Casper, XRP, HBAR. So let's go over this price action where we were able to capitalize on buy positions on March 17th, 2022, down here in this area, why it is that we took buy positions from these lows. And I told you guys in previous YouTube video is that if we were going to hold 75-cent region on XRP, we were going to come into where? We were going to come into where, guys? I told you guys this, okay? And again, I don't pop smoke on YouTube, all right? I'm not sitting here boasting out all these unrealistic bullish targets. I give you guys realistic expectations on this YouTube channel. And I told you guys in the previous XRP video, for anybody that watches, I'll hold above 75 cents, or the supportive area for the people on YouTube that like to call it support, right? We are going to come into the 80 to 82 cent range. And would you guys look at that? Both of those targets to the T were met, all right? So again, not popping smoke, giving you guys realistic expectations. What was the market overall doing? Coming and taking out this trend line liquidity, right? Liquidity above these highs, liquidity above these highs, liquidity above these highs. We were able to determine that, right, prior to all of this price action even playing out, mainly because we understand manipulation in the market. At least if you guys have been watching this YouTube channel, you should understand it though, this far. There's over 130 videos on this YouTube channel explaining some of the interesting facts about the market, some of the interesting ways that the market moves. If you guys haven't seen those videos, go back and watch them, especially if you're new here. All right. So let's break down this price action. First, what we're going to be focusing on, again, is the previous day's orders. All right. Whether it's Asia, London, New York. Now, we're not too interested in what Asia session did, mainly because Asia session took a sell position. Asia session, bank and institutions, as you guys can see, sold at a premium, where the previous day's session, London, sold from around 77.5 cents. As you guys can see, the psychological level to the right-hand side, I'll go ahead and I'll just mark that off for you guys. Okay, so what did the bank and institutions during Asia session do for this session? Well, they pushed price up, they manipulated the market, they created an early buyer environment prior to the session open, prior to 8:30 a.m. What? Asia time. Okay, as you guys can see down here at the bottom, right, there are what? Bullish candlesticks, right? Previous to that, there are bullish candlesticks prior to the session. So manipulated retail traders would see these bullish candlesticks and get manipulated and think that because of all this price action, the market is going to rally. No, banking institutions are not going to buy at a high. So what do the market makers do? They push price action down and liquidate the lows below London session. And look at that, below their previous day's orders right here. Okay, again, liquidating any sell stops that were beneath these lows and any over leveraged buy positions from retail traders that were taking trades in these areas in the form of what? Retail support. Okay, we trade against retail support. We know that the market makers are doing what? They're specifically moving and manipulating the market to come and take retail trading positions and to come and activate buy stops, sell stops, and then move the market in the other direction to make money. Okay, look at this. That is exactly what lies beneath these lows. We can see that the banking institutions sold at a premium, and then they manipulated the market to come and grab orders. Now the market reversed, held above the psychological level 7.5 and continued its uptrend. All right, so now that we've broken down all this price action right here, let's dive into how we were actually able to capitalize on this move coming into the session. All right, if you guys are with me so far, make sure that you smash that like button. I know that these video breakdowns are helping some people. I've gotten such great feedback on how it is that I break down the market. And again, I really do appreciate it. I'm sorry. I really do apologize that the market is saturated. Protect yourself and make sure that you're not accumulating rubbish information. Okay. Now let's focus on this London session, since we know what happened in this Asia session and why it happened and what they were doing, right? Manipulating price to take out retail trading stop losses and retail trading sell stops beneath these lows from people that bought and people that were willing to sell underneath of these lows if the market activated those sell stops, okay? So this London session, what happened? Again, paying attention to institutional orders. Most times, I'd say about 8 to 9 times out of 10, banking institutions put in main orders, right? Main orders, 2 of them. Every single session from London to New York, from New York to Asia, and from Asia to London, banking institutions will put in 2 main orders, okay? Then they will also put in a couple of orders to manipulate price, but 2 main orders in the form of bullish scenarios or bearish scenarios to move the market in their favor. Well, as we can see here, London session, if we're looking at the order blocks, took 2 buy positions from around 7.45 and from around 75 cents. Okay, so I circled and highlighted those orders for you guys. Why do we know that these were institutional orders? Well, because we know that the market makers are the only people with the amount of money to move the market, right? So what do we see here? We see a buy order here placed. We see the market start to consolidate a little bit. Then we see the market buy again and break structure. We know that these legs that were created in the market, the banking institutions are the only people with the amount of money to move the market like that. So we know again that this was order 1 and this was order 2. Now, what we're going to be focusing on now that we've identified the orders in the market is the psychological levels. Okay, so we see here that this was around 74.5 cents. We see here that this order was around, we're just going to round that off to 75225. Okay, so I identified that here for you guys with the blue dotted line. All right, so again, going off the ideology that the banking institutions piggyback off of each other and they manipulate price action prior to the session open. Let's zoom into this area here because I really want you guys to see this manipulation. So what do we see that's significant in this area here? And I'll highlight this, change my charts to New York UTC. Again, I'm giving you guys gems on gems on gems, and this isn't even half the stuff that I give to the CYPRX advanced students. This is just stuff that I give to you guys on YouTube. So hopefully you guys are capitalizing on this information. But we'll take from 8:30 a.m. to 6 a.m. is the manipulation window for New York session. Okay, boom, would you look at that? All right, what do we see here? We see buyers in this area, and we also see sellers above these highs. So we have what? An early buyer, early seller scenario. Early sellers above these highs, early buyers beneath these lows. What do the market makers do? They manipulate price action with this bearish candlestick. They pump price down beneath these over leveraged buy positions, and also people that are willing to sell at these lows to take sells, right? So they have what? Sell stops beneath these lows and buy positions with stop losses hanging underneath of these lows. Okay, maybe potentially move to break even now at this point, right? Hopefully if they're smart traders. Okay, what do the market makers do? They print a bearish candlestick to pump price down into that area of liquidity. But what can we see? What can we see that's interesting, again, off of the ideology that the banking institutions piggyback off of each other? Okay, we know that there were two orders here during London session, and we also know that the banking institutions are not going to buy high. So what did they do? Look at this. They manipulated price. They manipulated people into thinking that there was a rally that was going to take place prior to 8:30 a.m., which is the manipulation window. I'm not going to get into detail as to why this is the manipulation window. That's for the CYPRX advanced students, okay? But we see them liquidate any sellers. All right, look at this wick here, guys. I want you to really pay attention to price action. It's so interesting. This wick right here takes out any early sellers in this area or liquidates any positions, dips into this liquidity area. Then the market makers manipulate price and come and dip into this liquidity area. But what do we notice about this banking institutional order 1 from New York? Where does it take place at? Guys, look at the accuracy. Look at the psychological level 75225, okay? And look at where the banking institutions put an order in the previous day. Okay, boom. Now this is where order block traders will confuse you, and they'll just have all their charts highlighted and say, oh yeah, I caught this order block and but not really break down for you why this even happened. Okay, this move was only allowed to happen because here the banking institutions manipulated price prior to the New York session. So they created liquidity enough for them to come and grab that from the market to respect a previous area where the banking institutions during London session purchased from. As you guys can see, we have order 1 from London session, order number 2. Now, moving on, what can we see here? All right, how were we able to catch this move over here, right, the following day during New York session? Well, if we're looking at the ideology of New York session piggybacking off of previous New York session buy positions, we have now order 1 at 75225, and we have order number 2, again, where if we're tracking price action, we see here was a market order that manipulated price and moved it from A to B. We know that the banking institutions are the only people with the amount of money to move price like that. Then price consolidates, a lot of indecision in the market, and then again here, we see an order at 76 cents, right? The market makers move price again from A to B. Well, we see again 2 A to B moves during the session. These are 2 institutional orders. Again, confirming the ideology that banking institutions put in 2 main orders every single session between New York and Asia, Asia and London and New York. Okay, so we see here, again, 2 orders, if you guys are following me still, that the banking institutions or the Federal Reserve or whatever you want to call them, right? Whatever Wells Fargo, Citibank, Chevy Chase, whatever banking institution at this current time or big, private entity, okay, was trading with, billions of dollars, hundreds of millions of dollars, was able to move the XRP market here during New York session. Okay, and both of those orders took place at psychological levels. So if we're looking to get in on the next day's trading session for New York, we're going to keep some things in mind. Number 1, that the banking institutions are not going to want to buy high. Okay. Number 2, that if they are going to want to buy, they're going to want to attack liquidity. number one. Then number two, they're going to want to buy off of previous areas that banking institutions purchased from, so that way they are getting a discounted price. Okay, so knowing all that information, let's dive into this trading day. So here, again, I'm going to come back to this, all right? And I'm going to explain what happened in this area because, again, we know that the daily candlestick opens when? When does the daily candlestick open? Prior to Asia session open during their manipulation window. Isn't that interesting that that's when the daily candlestick opened during the Asia session manipulation window, all right? So first, let's get into this London session manipulation, all right? So I highlighted that area for you guys, and again, that's from 6 a.m. London time, all right, to 8:30 a.m. London time, okay? Now, I really want to tell you guys why this manipulation window happens, but again, I have to reserve some information for the CYPRX Advanced students. But we can see here, same methodologies, okay? Early sellers and buy stops above these highs prior to 8:30 a.m. And if you look at this candlestick, it falls right at 8:30 a.m. I'll go ahead and change my charts to London UTC just to show you guys, okay? London UTC, 8:30 a.m., boom. We see buyers in the market, but we also see people that were anticipating sell moves, probably taking their Fibonacci from this high to this low because we had a little fractal break in structure here, and they were looking to take sell positions from these midpoints maybe, right? These order blocks here, order block traders will be, it's kind of hilarious. Order block traders would have been looking to take sell positions from this order block here, or maybe this order block here, looking for the market to come like that, probably having their charts. And correct me if I'm wrong, guys, but how many order block traders, okay, have you seen on YouTube, right? Or you've tried their methodologies, okay, and they fail for you every single time, right? Because they're telling you to highlight these order blocks. As you guys can clearly see, this was the last bullish candlestick before the down move that broke structure, right? So order block theory is that the market's going to come back up to this order block and then sell off, right? So you're looking to take positions like this, okay? Well, guess what? That doesn't work out for you. And that's because the banking institutions do not trade off of order block methodologies. Wake up. That is unrealistic. That is not logical in the market. And that is not what the banking institutions are doing. Trust and believe that that is a made up methodology, okay, by some guy that wrote Wycovian theory back in the day because he saw a recurring pattern in the market and told people that order blocks and all that crap exist. It does not. Banking institutional algorithms do not trade off of order blocks or anything like that, or any type of pattern on TradingView. Okay, they trade off of these numbers over here, and that's it. They trade off of algorithms and these numbers over here and where liquidity in the market lies. Okay, and you guys need to understand that. Understand that. Okay, so what do we see here? Again, prior to London session, early sellers and buy stops above these highs. Right here, we can imagine over leveraged sell positions, people taking positions from this order block, and people attempting to wait for price to come up into this area to trigger buy stops. Well, the market triggers those buy stops and then subtly reverses. So, right, what does that make retail traders do? It makes retail traders panic. It makes retail traders think, oh my gosh, well, I'm not in profit. I'm in drawdown. Let me go ahead and close this trade. And what does that do? That makes your broker money. That makes the banking institutions money. They're liquidating positions. Okay, then what do we also see beneath these lows? Right, 6 a.m. on the dot. But all in this area, what can we see? Trend line liquidity. On the fractal nature of things, if I was to go down to, let's say, maybe the 5 minute, okay, let's find that area of price action. Boom. That is a clear trend line, and it happens to fall in the manipulation window during London session. Okay, so again, trading against retail methodologies, order blocks, trend lines, retail patterns, okay, all of that jazz, we're going to attempt to train our brain to not trade that way, okay? So what do we see here? All right, let's focus on the two orders during this New York session, okay, and where they fall at during time. Time is the most important thing in this market, and the factor that everybody fails to pay attention to, okay? So we can see here, all right, I believe that there was news on this trading day at around 8:30 to 9 a.m., all right, and we can see here that that news down at the bottom came in at 9 a.m. and we see an institutional order come into this area. But what was this for? What was this for? What was this move for? Again, if we highlight the manipulation window, 8:30 a.m. to 6 a.m., look at this stuff that I'm showing you guys. This is insane, okay? If you guys are not paying attention, right, you need to pay attention. What do we see in this area? If you can identify it, you're getting good. We see retail double top, or a retail resistance area, or we can imagine early sellers prior to New York session were flooding into the market. So what was this move here? This move was a move to come and liquidate any positions prior to New York session that existed in the market, okay? I call these premature market involvers or premature retail traders, All right. They are entering into the market too early. They're not patient enough to wait for price action. Then what does the market do? Okay. Look what the market does. It comes back for the London session, early buyers and sell stops. Okay. The market, after grabbing liquidity from the New York session highs in the manipulation window, comes back for the liquidity and the manipulation window right down here during London session. Would you look at that? Now, to full circle everything, what were the banking institutions actually doing during this New York session? They were piggybacking off of what? Look at this, guys, over to the left-hand side. Their order number 2 from the previous day at 76 cents. And would you guys look at this? Let me put a psychological level marker on for you all. Boom. What can we see? 76 cents to the T. Another institutional order for New York session was placed and the market rallied all the way up into 82 cents. Okay, just to show you all, let me zoom out. Boom. Okay, so again, focusing in on price action in extreme detail. I hope that you guys enjoyed this breakdown to show you the manipulation in the market, okay? In extreme detail. I didn't cover any order blocks. I didn't sit here and say anything about Wyckovian theory. I didn't sit here and tell you guys that, oh, this order block and this is what you need to highlight and da-da-da-da-da. No, I'm showing you guys in extreme detail as to why the market makers did exactly what they did. Okay, how they manipulated price, how they never leave liquidity behind, specific times in the market to be paying attention to, which nobody on YouTube covers for some odd reason. Maybe it's because they don't have this information like I do, or maybe it's because they don't want to share it and they're greedy and they manipulate you into marketing techniques to, join their mentorship that costs $2,000, $3,000, $4,000. I want to give you guys so many examples and just call traders out because it's disgusting. It is disgusting how saturated this market is. There's so many YouTube channels out there that I want to call out because I watch their videos just to see what they're trying and attempting to teach. And it's rubbish. You guys need to protect yourselves, okay? Protect yourselves, please. Now, I told you guys I was going to come back to this manipulation window again, just a full circle, and show you that retail trading positions get liquidated. So we see here manipulation window prior to what? Prior to Asia session. This is their manipulation window. We see trendline liquidity. We see double bottoms. Okay, what did the market makers do during Asia? It's hilarious. Imagine how many retail traders were so freaking confused here. And remember, I told you guys that retail trading order block traders, right? We're looking at this. Let me get rid of all this stuff, okay? Because you guys know about all this breakdown now. But look at how many retail traders, okay, were thinking about this as a break of structure. They were looking at the market dumping here, okay? They were looking at this as a new low, and then they were highlighting order blocks in this area to take sell positions from. Okay, so they were waiting for the market to come back up to their order block, and they were looking to take sell positions. No. What was this entire move here? What was this entire move here now that you know the CYPRX strategy a little bit into detail? Okay, this isn't even, I would probably say this is what's in the beginner material in the CYPRX course. Okay, this isn't the advanced or the 2.0 material. This is just what I cover in the beginner section. Okay, check this out. What do banking institutions do during Asia session? They liquidate any early sellers or any leveraged sell positions prior to or premature Asia session. And they also activated what? Buy stops above these highs. Then what did they do? They manipulated price to the downside to come back for the liquidity beneath this double bottom formation. Okay, this is the retail trading pattern trap right here. Okay, and the banking institutions know that this is where liquidity in the market lies. Again, proving my methodologies of time, liquidity, and manipulation in the market. Banking institutions are not taking trades from order blocks. You guys need to wake up. That there's so many people on YouTube that trade order block methodology, and I laugh at them hilariously because I sit there and I will watch some of their videos just to see what it is that they're teaching, and they will literally tell you, oh yeah, highlight this order block because this the last down candle before the up move, and we have gaps and we have imbalance in all these candlesticks, and the banking institutions are eventually going to come back and fill all that in, and then you can look to take positions from that and blah 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 blah. No. Wrong. That is not what the banking institutions are doing. You need to be focusing on the psychological levels that the banking institutions are putting in orders from and seeing where the banking institutions are piggybacking off of. As you guys can see, okay, based off of the methodologies that I just taught you, what can we see? We see an institutional order in this area. We see the market pull back right here, and we see another institutional order in this area. What did that take? Where did that take place at? Where did that take place at? The 776 level, right? The psychological level 776. Well, if we look here where this institutional order took place at, It took place at the 776 level. Okay, again, right? Understanding that the banking institutions are not looking at TradingView, trading order blocks. They're trading these numbers over here to the right-hand side on big monitors with keyboards that have nothing but numbers on them. Okay, I've already told you guys and explained to you that there is an institutional trader in CYPRX confirming all of this information. All right, I'm not just here popping smoke to you guys trying to fill your head and saying, you know, banking institutions don't trade on TradingView. Now, we are given the platform TradingView so that we can capitalize on trades, okay? But you need to learn how to read price action properly. All right, blessings to you guys all. I hope that this video breakdown helped. Again, this is simply how I make money trading XRP on Uphold. I really do appreciate the love and the support. Anybody that is interested in the mentorship, that link is in the description down below. We're looking for highly motivated individuals that are seriously looking to take their trading career to the next level. Okay, we're not here to sit and you know, baby or lollygag people. Okay, we're looking for people that are really looking to accumulate information and then hopefully apply it properly to the charts and the techniques that we teach. Everybody take it easy, be safe, be cognizant, enjoy your weekend, and I will see you guys next week.